pressure on Avenue Supermarts. Stock is down nearly 3%. Mangalam is here with the highlights.
Well, the company reported its numbers over the weekend, and importantly, there was one positive and two negatives. The one positive was the revenue growth that came in around that 18% mark, led by the company adding new stores, DMart Ready growing around 25%, and the same-store sales growth coming in at 8.3% as well. But a large part of that positivity was priced in because in the prior week, when the company reported its operational update for the third quarter, the street liked this 18% revenue growth number, and the stock rallied about 10% on that day itself. However, the two negatives, one was on the margin front, where the EBITDA margin compressed by about 60 basis points, led by an impact of 20 basis points each on gross margins, operating expenses and employee expenses on account of the following factors which the company believes has impacted margins. One is the increased competitive intensity because of discounting that we've seen by FMCG companies and other value retailers, the QCOM impact, so to say. Second would be the increase in number of stores that they've had, 22 stores in the first 9 months of this year. And the third more important factor is that their product mix, the assortment mix, is still not significantly changed at 23% of apparel and general merchandise, which are all margin accretive. That brings us to the third negative, which was the uncertainty around leadership, because in a surprising move, Neville Narona has decided not to renew his contract, which ends on 31st January 2026, and will step down from the company as the MD and CEO in a year from now, for which the company has announced Anshul Asawa as the successor, the CEO designate. Anshul has been with Unilever for about 30 years, currently serving as the country head of Thailand. So how the leadership transition takes place is something that the street will most definitely keep an eye out on. Brokerages have written on DMart as well. Citi has a sell rating. They've said that over the last 10 quarters, 9 out of 10 quarters, the EBITDA growth has lagged revenue growth, implying margin pressures for the company. Bernstein has said that the third quarter SSSG was strong at 8.3%. But remember, there could be an element of festive season and uplift. So over the next couple of quarters, there could be limited SSSG growth for the company. And Morgan Stanley has said that management commentary in recent quarters has actually raised doubts among investors about DMart's growth algorithm itself. So we'll keep an eye out on that. And JP Morgan too has cut its target price to around 41.50 on the stock.
Okay, thank you so much for that, Mangalam. But